Hey, good morning, everybody. Today is Monday, February 23rd, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. After starting the day lower, stocks turned significantly higher on Friday. Last week was a pretty good week for the bulls, with the S&P ending the week with a 0.6% gain, while the NASDAQ Composite, which didn't have a down day the entire week last week, tacked on another 1.3%. What we're looking at here is the bull market. This is the longest bull market in history. The bull market started in 2009, actually in March of 2009. This line right here is our long-term trend in the NASDAQ Composite going all the way back to the beginning of the bull market. This is our intermediate trend, and this is why we're looking at this view of the market. We have an intermediate trend line, we create a parallel trend line, and we drop it in at the high point of the lower trend line, and that gives us our trading channel on our intermediate trading channel on the NASDAQ Composite. Why that's important? Let's change to a daily view and add some markups. And let's actually bring this in a little bit further. The reason the top channel line is important is currently the NASDAQ is trading between support in the 4811 area, which was its prior high, and resistance at this upper channel line. We have a long way to go to that upper channel line. This market could go considerably higher before we challenge that resistance. Let's bring the market in even closer. Friday, the NASDAQ was up 31.27 points. That's 0.63%. We closed right smack at the top of our daily trading range, which makes the bulls happy. Trading volume was a little bit heavier than the prior day, but was still below average. We'd prefer to see the trading volume on up days a little bit above average, or a lot above average. We want to see it above average. Right now, our 1 to 6 month timing model is back onto a margin signal. What that means is that conservative investors should be fully invested at this point with their full complement of stocks. If you have a full complement of 6 stocks in your portfolio, you should have 6 stocks. You don't necessarily have to be fully invested in all 6 of those positions, but all of those positions should be filled. Aggressive traders can be leveraging their portfolios with margin at this point. Let's take a quick look at the MACD histogram on the NASDAQ Composite. MACD histogram on Friday was trading above the 0 line and was higher than the prior day, which gives us a mini uptrend because we are above the 0 line and we are trading in a uptrend on the histogram. We have an immediate bias on the NASDAQ Composite of bullish. I want to point out one thing here. Friday was the 1, 2, 3, 4, 5, 6, 7, 8th consecutive up day. Markets don't go straight up. I would expect a correction in the coming week. I would look for support in the 48.11 area, but frankly, I'd be pretty surprised if we actually got down to that point. I might be a little bit selective about what I buy at the beginning of the week, with the idea that maybe I can get it a little bit cheaper as the week goes on. S&P 500 on Friday was up 12.85 points, or 0.61%. S&P closed right smack at the top of its trading range, making the bulls happy. Trading volume was higher, giving us an accumulation day, although trading volume wasn't quite average daily. We want to see average daily volume when the market moves higher. Right now, we are on a 1 to 6 month timing signal of margin. S&P 500 and NASDAQ are both in confirmed uptrends. We've been in a confirmed uptrend since January 8th. We have on the S&P 500 3 distribution days in the past month. That compares with a total of 1, 2, 3, 4, 5, 6 accumulation days over the past month. A lot more accumulation than distribution. A little bit of concern with the S&P 500. We have been having a lot of trouble overcoming resistance in the 2094 area. Although we've traded above the 2094 area for a week now, every day we've traded below that level, including on Friday. And so, though we've closed significantly above that resistance level, I'm still not ready to call that support because it hasn't supported the market up to this point. If the market moves higher from here without undercutting that 2094 level, we will change this to support. But for right now, I'm going to continue to call it resistance. Looking at the MACD histogram for the S&P 500, a little bit more complicated here today. The MACD histogram, as you can see, is trading above the 0 line. Friday, the MACD histogram closed just slightly higher than it did on Thursday, which gives us a short-term uptrend. Because we are trading above the 0 line, which is bullish, and we have a short-term uptrend, our immediate bias on the S&P 500 is bullish. That's about all I have today. If you want to talk about the markets or any of our trading strategies, please feel free to give me a call. Drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session, see my contact information on the homepage. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, following this video, there's a disclaimer video. Please take a look at that. Again, my name is Cliff Backus. This is your daily video market review. Have a safe and profitable day. Keep your stops in place, and we'll see you again tomorrow. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.